My name is Arira Joseph. I am the founder of Bluefoot Academy. At Bluefoot Academy, we are dedicated to financial education, financial empowerment. So we teach individuals what they should look out for before they buy the shares of any company, how they can trade the forex market using fundamentals and combining it with Matthew chapter 25, verse 2 to 13, and also how they can invest for the long term in crypto market. Today, I want to talk about the things you have to look out for before you buy the shares of any company. So there are 7 things you have to look out for before you buy the shares of any company. The first thing you have to look out for before you carry your money and invest in any company is the company's revenue. So the company's revenue, you want to buy their shares, must be growing consistently for the past 5 years. The second thing you have to look out for before you buy the shares of any company is the company's profit. The profit of the company you want to buy their shares must also be growing consistently for the past 5 years. The third thing you have to look out for before you buy the shares of any company is the company's profits. Not profits, cash flow from operating activities. Now, cash flow is the money a company brings in from business activities like sales and manufacturing. So the cash flow from operating activities for the company you want to buy their share must be growing consistently for the past 5 years. The next thing you have to look out for before you buy the shares of any company is the company's economic moat. Now, what is economic moat? Economic moat is what the company has now that is making them relevant now and will make them relevant in the future. Economic moat, I'll take that again, is what the company has now that is making them relevant now and will also make them relevant in the future. So let's say we want to buy the shares of Microsoft or MTN Nigeria or any company want to buy their shares. So the first thing you will do to find the economic moat is first to identify the industry. Identify first the industry of the company you want to buy their shares. First, you identify the industry of the company you want to buy their shares. So for Amazon or for Microsoft or for MTN, you identify the industry. The next thing you have to look out for is you look for other companies that are also in that industry. So let's say it's Microsoft. And Microsoft is in software and communication. So you look for other companies that are in software and communication. You list them out. The third thing you look out for in finding the economic moat is you look for the revenue for the past 5 years, the profit for the past 5 years, the cash flow from operating activities for the past 5 years, and the current number of customers for all these companies that are in that particular industry. So the company that has the greatest number, that is the king of that particular industry. So when you identify the king of a particular industry, the next thing you move on to is identifying whether that company will still be king in the next 10, 15 to 20 years. So how do we do this? We do this by researching on the current technological innovation the company that is the king of that particular industry is working on, or the number of patents they have. So this one is not book something. You have to do your own research to look for the technological innovation this current company is working on, and that's what's going to keep them ahead in the near future. So the next important thing you look out for before you buy the shares of any company is the company's current ratio. Now, current ratio is current assets divided by current liabilities. It tells investors whether a company will be able to pay their short-term debt. So if the value is less than 1, it means this company you want to buy their shares, let's say Microsoft, will not be able to pay their short-term debt, so you can avoid them. But if the value is equals to 1 or greater than 1, it means this company will be able to pay their short-term debt, so you can buy their shares. So the next thing you have to look out for before you buy the shares for the company is the company's returns on equity. Now, returns on equity is net income divided by shareholders' equity. For Bluefoot Academy, our standard is that it should not be less than 10%. So the returns on equity for the company you want to buy their shares should not be less than 10%. Returns on equity is a must check. The last and the most important thing to look out for before you buy the shares of any company is whether this company is selling at a discount. You want to check the intrinsic value of a company. Now, the reason why we have to check the intrinsic value of a company is because A good company can be a bad investment if you're buying the company at the wrong time. They buy the company shares at the wrong time. Now, the important question intelligent investors will ask is, what is a good company? When is the right time? So a good company is a company that has consistent growing revenue for the past 5 years, consistent growing profit for the past 5 years, consistent growing cash flow for operating activities for the past 5 years, a strong economic moat, returns on equity that is not less than 10%. So these are the qualities of a good company. I'll take that again. A good company is a company that has consistent growing revenue for the past 5 years, consistent growing profit for the past 5 years, consistent growing cash flow from operating activities for the past 5 years, a strong economic moat. Their returns on equity is not less than 10%. Their current ratio is not less than 1. So these are the qualities of a good company. When you see this kind of company, the next thing you want to look for is it the right time to buy the shares of the company? So the right time is when the intrinsic value is is greater than what is quoted in the stocks market. So it is undervalued. The right time is when the share price of the company is undervalued. And when it is undervalued is when the intrinsic value is greater than what is quoted in the stocks market. So it is undervalued. So I want to move over to practically show you how to find out all these things. The returns on equity, the current ratio, the revenue, the profit, the cash flow for operating activities, and the intrinsic value. If you're with me, let's proceed. So the web application we are going to use to find this is investing.com and our intrinsic value calculator. So the intrinsic value calculator we use to calculate the real share price of a company is given to our premium students, those people that pay to learn about the stocks market. We give them intrinsic value calculator to calculate the real share price of company so that they can know whether they should enter or not. So open our web application, our Google Chrome browser. We'll click on New tab. The web application we want to use is investing.com. So we'll type investing. Okay, it's already up. Investing.com. Click on go. Okay, the company want to find their shares. We want to understudy is let's say Microsoft. Let's understudy Microsoft. Let's see what Microsoft has for us. Let's research Microsoft using what we have just learned. Investing.com, please open. Investing.com. This site can't be reached. Why can't it be reached? Okay, it's now open. Okay, now to the top right of investing.com, you will see a search icon. So you click on that search icon. Let me click on the search icon to the top right. Now, you're going to put the company you want to research in the search bar. Micro. What's popping? What's going on here? Okay, the website is still loading. Let's allow it to load better. At this time, I'm currently uploading a video to my channel and also producing this video. So let me put micro. Let's see what comes up. It's Microsoft we're looking for, not Microsoft. Put the complete name, Microsoft. Microsoft Corporation. Yes. Stocks Nasdaq. Not Stocks London, not Stocks Estera. Stocks Nasdaq. You click on it. It's opening. We want to look out the financials of Microsoft. It's loading. Okay, the current share price of Microsoft is $514.60. So we want to look for the financials of Microsoft. So you scroll down, click on this place that says financials. Okay, install our app on Google Play App Store. I'm not using the app, I'm using web application. So I'll wait for this overlay to leave here so we can access what we are looking for. This overlay is preventing us from accessing. We don't want to install the app, for Christ's sake. How do I close out from this? Okay, let me load the page again. Sorry, I just refresh the website again. It's taking too much time. Oh, this site can't be reached. Am I out of data? Okay, what's going on? What's going on? Okay, let me refresh the website again. It's the financials we try to look for. Let me pause. Okay. Okay. That's loaded. Okay, yeah, the financials has loaded. I just came out of my house to get good network. That's why you can hear that noise. People are having a chit chat in their own compound. Okay, so the financials of Microsoft has loaded. So the revenue for Microsoft is I told you that the first thing you have to look out for before you buy the shares from the company is the company's revenue. So the first thing we're looking out for is the revenue. And the year 2020, it was $168,088. And let's scroll down to the end of this website. They say in millions of USD. So all the numbers here are in millions. All the numbers here are in millions. So you multiply all numbers here by 1 million. So 168,000 times 1 million is 168 billion. So for 2021, their revenue was 168 billion. 2022 was 198 billion. 2023 was 211 billion. 2024 was 245 billion. 2025 281 billion. So Microsoft has given us record for 2025, and their financial year ends is okay. Their financial year for them ends every 30th of June. That's why you can see their calendar. The date is 30th of June. 30th of June. So for 2025, their financial year has ended. So that's why they can report for 2025. So they've had consistently growing revenue for the past 5 years. So they have met our first checklist, 5/5. The next thing you want to look out for is the net income. That's the profit for the past 5 years. So for 2021, it was 61 billion. 2022 was 72 billion. 2023, 72 billion. 2024, 88 billion. 2025, 101 billion. So they've had 4 years of consistent growing revenue, profit in 5-year period. So the next thing you want to look for is the cash flow for operating activities. You want to check whether it also grew consistently for the past 5 years. So check cash flow. This is how you check cash flow from operations. So it is called cash from operations, but I call it cash flow from operating activities. So for the year 2021, it was 76 billion, their cash flow from operating activities. For 2022, it was 89 billion. 2023, it dropped to 87 billion. 2024, it rose to $118 billion. 2025, it moved to $136 billion. So they've had 4 years also of consistent growing cash flow from operating activities in the past 5 years. So the next thing I want to look for is their returns on equity and also current ratio. So we'll click on this part that say ratios. Ratios. Okay, the ratios tab is still opening. Oh, this issue we had before. Must we install your app? Okay, I think let me stand up from my location and go look for better network. Please bear with me. I'm having network glitch now. Okay. Okay, yeah, it has loaded. So the ratios tab has loaded, and I just refresh the page again. Let's see what happens. Okay, so we are looking for returns on equity under the ratios tab. So it's under management effectiveness. You can see returns on equity. To the right of it is 33.28%. So remember our benchmark is 10%. That should not be less than 10%. So they have met that benchmark. So the next we will look for is the current ratio of Microsoft. So under financial strength, you can see current ratio. To the right of it is 1.35. Oh, our website just said 1.35. Remember I told you that current ratio is current asset divided by current liabilities. It tells investors whether a company will be able to pay their short-term debt. So our website just misbehaved because of network. Let me go back into my abode. I came outside and got this challenge. So the current ratio for Microsoft is 1.35, and it is greater than 1. It means Microsoft will be able to pay their short-term debt. So Microsoft is a great company, it's a good company that we can buy their shares. So we are just having a little network challenge. That's why all this hula baloo is popping. So the next thing we want to look out for is Microsoft's intrinsic value. We want to check whether Microsoft is overvalued or undervalued. So That's their $514. Is it the right price to buy the shares, or we should wait? So let's go to our intrinsic value calculator. Okay, intrinsic value calculator. Where is the calculator? Okay, this is it. So I just did intrinsic value calculation for Meta Incorporated. So we want to put the name of the company, Microsoft. The next thing we want to put here is the free cash flow of Microsoft. So we'll go back to our investing.com website. And what are we looking for here? Where's investing.com? Okay, yes, there's it. Let's click. Let us load it again. Let's see what happens. Let me close out from all these tabs. It's loading. So we want to calculate the intrinsic value of Microsoft. This site can be reached. What's going on with my network? Okay, let's see what happens here. We are trying to know the intrinsic value of Microsoft. So we are going back to investing.com. Let me refresh the page. Whether what could be wrong, my network is really bad. Okay, let's proceed. So we're looking for the free cash flow of Microsoft. Under the financial tab, we'll click on financial summary. Okay, let's wait, please. Let's see how it goes now. Now showing find a stockbroker. Okay. We're looking for the free cash flow of Microsoft. Okay. It's under financial summary. The free cash flow for Microsoft for the year 2020. Look at it here. Under free cash flow is 61 billion. 61 billion. 61.070 billion. So we'll go back to our calculator and put 61070, then 6 zeros, 1 2 3 4 5 6. What's the returns? The returns on equity for Microsoft, we'll go back to Microsoft. Microsoft returns on equity is 33.28%. I'll go back to our calculator and put 33.28%. Then period. Now this calculator that we are using to calculate the intrinsic value of Microsoft operates based on the discounted cash flow method. And in the discounted cash flow method, we try to know the worth of a company in the future based on their free cash flow. So we want to use this $61 billion that is the free cash flow of Microsoft to know what will be their worth in the future. So that future should not be less than 10%. That future should not be less than, not 10%, should not be less than 10 years. So let's put 13 years. So in 13 years time, what will be the worth of Microsoft based on this free cash flow of 61 billion? So the next thing we want to look out for is the outstanding shares. How many parts has Microsoft been divided to for investors to buy? So we'll go back to our investing.com and we'll click on general. This pop-up, we close it. Allow the general tab to load. It's loading. I just clicked on general. General is top left. Still on the same lines of the financial technical forum. See general here. Okay. This pop-up has come up again. Let's leave it. It's going to disappear. Find a stockbroker. We are not looking for a stockbroker. So you just sometimes you wait for them to do their own stuff. I don't want to download their app. Okay, yeah. So the general tab has opened. So under the general tab, you click on ownership. Microsoft share price is 514.60. So we'll click on ownership. It's in the ownership section. You will find the outstanding shares of Microsoft. For Microsoft, for this investing.com website, it is called common stock held. Okay, this pop-up has come up again. I'm going to still wait for it as usual. Okay, yeah. So for Microsoft, look at common stock held for Microsoft. For Microsoft, the common stock held is 7.43 billion. Is the outstanding shares of Microsoft. So it's the number of parts that Microsoft has been divided into, and each part goes for $514. $514.60. So we are going to go back to our calculator and put what is the outstanding shares of Microsoft. 7.43 billion. Go back to our calculator and put 7430. 1 2 3 4 5 6. So the current share price of Microsoft is 514.60. So now we have put in Microsoft Incorporated. We have put in the name of the company. We have put in their free cash flow. We have put in the returns on equity. We have put in the time in the future we want to know the worth of a company based on their free cash flow. We have put in the outstanding shares. We are putting the current share price. So I want to calculate to know whether this current share price is overvalued or undervalued. So click on value and calculate. The intrinsic value of Microsoft is $241 and it is 113% overvalued. So we can see that Microsoft currently is overvalued. So the best time to buy Microsoft shares is when Microsoft falls below $241. So my name is Abraham Joseph. This is how I educate individuals on the things that to look out for they buy the shares of any company and the right time to buy the shares of any company. Take charge.